All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and it is Tuesday, January 8th. So another strong day for the averages. Europe did very well today as well, so we followed their lead today. The averages, what did they return today? SPY was up close to 1%, up 90 basis points. The Qs were up the same, and then more outperformance from the small caps. So IWM was up 1.5%. And that's really been a leader, and that's something that we talked about in this weekend's newsletter, last weekend's newsletter, as well as IWC, the microcap ETF. So, some questions kind of remain a little bit. I think the most concern I think that most traders are talking about, well, we've had a really nice run since the day before Christmas, since Christmas Eve, and then it becomes okay. We're going to encounter at some point some overhead resistance. So my view on that is, yeah, I mean, I think that that's true. It's just trying to predict when that occurs is just really difficult, right? I saw someone this morning and they were saying, oh, most technicians think like this, and this could occur. Yeah, I mean, I'm not really in the camp of making predictions. I think you just kind of have to take some of your trades and follow some of your individual setups and make sure that you're taking targets. I mean, this is not rocket science. Make sure that you're taking targets and ratcheting up your stop prices. I mean, that's what trading is all about. It's not about, for me, it's not about making predictions. The other thing is, if you look at the SPY chart, what you will find is, this looks a lot different than individual names. And I'm going to spend some time going over what names and what setups I think are still out there that look really good, in my opinion. But, always I want to make sure that everybody understands this, because so many people throw out levels in the S&P and they throw out, on the daily chart, on the weekly chart. I mean, keep in mind that you're talking about an index that has all different types of groups of stocks in it, right? So, of course, tech is the biggest weight. Healthcare is also a large weight. Financials are 13%, right? So if you don't own any financials, right? If you're mostly a single stock trader and you're owning, you've got various different names that you have on, but you don't have any, if you don't have any financials, if you don't have, let's say, any utilities or REITs, then really using an SPX is probably not the most ideal index for you to kind of look at. Um, so, that's kind of my thought on that. I think it's, a nice representation of overall stocks, but it's not really going to tell you what to do in individual names, and I'll get into that. But I wanted to go over this. In terms of the day's volatility or the day's move. We caught some nice support. I don't think I was looking for kind of a move down to the bottom of value. We got close to there in the SPY, and then we bounced. So it wasn't a perfect. You can see it's pretty darn near close. Same thing with the Qs this morning. So it kind of gave us a little bit of a shakeout until about 10:55, maybe a little bit of profit taking. And, I think there's a little bit of difference from what we were seeing a couple weeks ago. A few weeks to a couple months ago. Every time the market was bid up going into the open, it would get completely slammed. So we saw a little bit of that in the first hour, but we basically recovered right back to where we opened. And it was a nice day to kind of day trade again. If you took advantage of that volatility and just thought that we weren't going to completely break down. Qs was a perfect one off the bottom of value. So again, the value areas really give us some nice clues on what's going to happen. After you go all the way through, this is what's known as the 80% rule. Once you start outside of value, get to value, there's an 80% chance that you go all the way through it, which is basically what we did there in the Qs. And then basically it'd be recovery for the day and right back to the open. So up 90 basis points. It's going to look like a doji candle for the day. IWM has just been on a tear. This one, less. And we talked about that around 10 o'clock. I said, wow, I looked at two things that kind of helped me a little bit trade for the day. I looked at crude, because I do think there's been a correlation with crude, and crude never really broke down today. So the S&P and the Qs were going down, but crude never, that was one thing that we saw again weeks ago, was that you would look at what was going on to equities and you would look over at crude and they were both doing the same thing. It was just, no risk going on whatsoever. So today that didn't happen in crude. It kind of just hung in there when everything else was selling off. And same things with the small caps. The small caps have been holding up extremely well. I want to look at a couple charts and then we'll start looking at. So let me just go to my customized my customized indices here. I want to look at both IWM versus SPY, and then I want to look at high yield spreads, which I was just looking at that too. Let's go IWM here, SPY. But yeah, you could see, and that's kind of what I thought you were going to see, is small caps have been really outperforming since we hit that low in the indices. So that's exactly what you want to see, right? Is you want to see small caps outperform. Yeah, and it's going to be coming. So, I mean, do markets move in a straight line? No, not normally. So yeah, we could see some back and filling. I do think that this was a good opportunity to kind of buy the trade meeting rumor, and then use that as kind of sell the meeting as well once the meeting concludes. I think they said tomorrow that's going to conclude, so we'll see what happens after that. So that's one relationship. The other relationship that I wanted to look at is credit spreads. So we could look at and let's put TLT in the numerator for this one, just to see the health. And yeah, I mean, it's a pretty decent, massive move, right? I'm trying to come up with a catchphrase for this, for what happened in high yield and bank loans the last couple weeks. Kind of calling it a high yield hiccup. That's my phrase for it. But you could see, look at a 5-year chart of credit spreads, and this is when credit spreads really widened, indicating risk off, and now they're coming back. So a nice move back, and tightening going on now in credit spreads. And if you look at the HYG, right, the high yield credit ETF, you could see. I mean, this is a hell of a recovery, right? This was kind of one of the things that was really getting worrisome. But look at it. So, um, so can we recover further? Yeah, I mean, I think so. Look at the move, $80 to 83. That's a really big move. So you still have the declining 200-day moving average here, but we're now back above the 5, 20, and the 50-day moving average. Another one to look at is the bank loan ETF. This thing had a major capitulation go on as well, and look at this thing come back from 21. This thing again, if you kind of look at back here, what the normal range is, it's very small. So this thing is trading much more volatile than it normally trades. Okay, so I wanted to talk a little bit about that. There were some big trades, which I'm not going to go that much into detail, but consumer staples. Looks like there was a big rotation into consumer staples and a big rotation out of consumer discretionary. So it just looks like one fund was doing this. Also, there's some big blocks, so you could see this. 5 million shares traded. Again, this is hefty stuff. This is like a $200 million trade. Bought into XLP, and it looks like consumer discretionary. It looks like somebody took some profits maybe, and sold 2 million shares. Again, different. The price of these are completely different, so you kind of have to do the math. But 2 million shares of this, again, it's to what 200 over a $200 million trade. I think I was a little bit too high on that on the consumer staples side, but still big trade. So it looks like I just wanted to bring that to your attention. Also an XLF. Also saw this in a couple other healthcare ETFs as well, but look at 14 million shares sold. So pretty big trade in financials as well. So couple other names. Oh, yeah, so I wanted to go over some of the single stock names. So here are names that I think are setting up pretty well. Let me review a couple open trades that I put on, just to talk about where these things are. I did not take a target in keys. I'm kind of letting it run. I've got a target up here. Maybe I should have taken my first target, but I got long in the beginning of the day yesterday. Zen is another one. Again, so these look completely different, right? And we went through some of these examples in last night's webinar, But Zen is following through from yesterday as well. Again, look at the difference between looking at a SPY chart and looking at ZEN. Just a lot different. And then my colleague Pat brought this name up, but Paycom. This is another name that's just starting to show some life. Another name that I like is IAC. Hasn't done anything. It's just been hugging the 200-day moving average. So this looks, has definitely not been as volatile as some of the other names in there, but you got a nice looking double bottom in here. So I like this name a lot. But it is a higher price stock. Tandem, I put on this trade today. TNDM, I think this looks really good. You could use your support now when I entered this trade, I said the support would be the 50-day moving average. You can now use the top of value. So again, ratcheting up your stop. So it's a good example. So 38 will be my stop now, with looking at taking, getting out of this trade around $45, which is that Virgin point of control up there. Also, these foods, casual diners or fast food names. Holy cow. I obviously can't put on every trade, but we talked about Wing in the trading room yesterday. This is Wingstop. Huge move out of this coiling type pattern that's been going on. Chipotle is another one. Again, tough to play Chipotle in options. The options market maker is really wide in this one, but look at the continuation that this thing had today. And then if you kind of go down the list in some of these names, Brinker. So again, it's not just one name. I always find it much more interesting when the whole group is doing this. Another name that I went long, small order, but was up 7%, was Carvana. We saw some option activity in that one that kind of got me to look that way. So, and then also I like McDonald's. I went over Zen. There's a bunch of names, right? So it's really what your capacity is to kind of manage these names, and really not get over the tips of your skis. Hubs is another one that is looking pretty interesting here. This is HubSpot. Smaller company than Salesforce. Salesforce continues to chug away very nicely as well. So it's really what you can manage, and making sure that you're taking some trades off. And I do think that if at this point, some of these names that have kind of run, you can kind of wait until they back and fill a little bit, right? I mean, just make sure that you're monitoring them. I've been watching Home Depot. It hasn't really been a name that I've gotten into, but maybe if it comes back, and I talked about that in last night's webinar a lot, a little bit about retesting, right? So a breakthrough value, maybe if it just retests back to 175, back to that trend line, I would be a buyer there if it holds the 175. So you don't have to be rushed. And if you're a little bit worried that we've gone, up in a straight line since the end of, since Christmas, then, you can kind of wait it out a little bit. What I did today too, to kind of make me feel a little bit better about holding some trades, is I bought some Q's puts at the end of the day. I also bought a little bit. So I've got two hedges on in options, and honestly, I hope those hedges go to zero. And I hope everything, right? If the hedges go to zero, that means everything else is going up. So hopefully, and that I'm outperforming. But it's not rocket science here, but I don't want to really read too much into the overall indices, other than that small caps are leading. I think high yield credit, completely different picture than it looked last week. So I think that hedge fund hiccup may be behind us. Let's see what else. There's always going to be some events. We'll see what happens with this trade stuff. It does have to. I think what I would be looking for is for them just to say that they're making progress, and just to kind of not kidnap the markets with volatility and so forth. I think if they say that they conclude this meeting tomorrow and say that they're making progress towards a more formal agreement, I think that would be your best looking outcome. If they take a step back, that's why I've got the hedges on. All right, so that's it for today. Thank you for watching. Have a great night. Check us out, tribecatradegroup.com. I don't mention this in every video, but we really have a great team that is in the trading room every day. Great traders in there. and bringing up different ideas. And what I do is basically, just try to help where I can and talk about resistance. We were talking about Macy's today, so I put a couple levels, and we do this all on the fly, and we kind of have a little bit of a discussion about it, and everybody post all their trades, their entries and their exits. So it's really great to watch. It's really great to participate in, and I'm really proud of having, a great company now for the last couple years, where everybody's trying to help each other, and with the goal of making money. So we're running at a real fine oiled machine right now. So that's it. And you could sign up for a week trial just to see what it's all about. Tribeca Trade Group.com. And that's it. Thanks for watching. Have a great night. See you tomorrow.